Hi, today I would like to show you how you can follow the big elephants on the market, follow the smart money, how you can anticipating and waiting for stop hunting trades from big institutions and turn that to your advantage. I will show you how to do. This technique is extremely profitable because it's also very safe. You can have tight stop losses and you can reach for 8 times your risk when it comes to risk reward ratio. Because if you're waiting for the banks to hunts for stop hunts and false breaks, um, if you follow that, it's not likely that they will trick you twice. Sometimes they do a trick 2 times, but that's not often. So let me show you how you can use this technique to get tight stop losses and making 8 times your money that you have invested in a trade. Here, for example, this is the euro dollar pair, 15 minutes chart. And you mark out this low here like this. And okay, I will put it, draw it a little bit. This was tricky. Now, here, okay? You see the pin here? I put the demand level here. You can see the price pushed up. So, when you see the trend is going down like this, with this technique, you need patience, be smart, just like a sniper trader here. This is sniper trading. This is precise. You're just waiting for the price to go below this line here, go below this demand level. And here you can see it. The banks, they know that retail traders, amateur traders, they put their stop here. If they go long here, they anticipating a further upside, and perhaps they have their stop losses here. Or lots of traders wants to buy in this area, very close this, because amateur traders, they anticipating and looking for the price to go down to a bottom level here. So lots of traders starts buying here, and the banks knows this. They know exactly how amateur traders trade. So they push the price down here to take your stop losses, because most traders, they put the stop losses below this point in this level here. So the banks, they push the price down here. They take your money because you lost your trade here. So your loss will be the bank's liquidity pool for the bullish trade on the upside. So you take your money, they get liquidity and go long. And also you can see this is a pin bar here with a long wick on the downside. It's also called a hammer when you see a wick on the downside here. You can see here, better explained like this, a long wick on the downside. So when you see, sorry, so when you see this at this level, at this important level, this is a fake bearish move to trick you, that the banks want you to think that the price will go down. They just want to take your money here, to take your stop losses. So that's the sign here when you see this wick at this important level. And we can see that it's a choppy market here, up and down. We have a sideways market here, nothing happens. And you can see the price this time tested exactly this level. We have a double bottom here. This is one, this is two. Of course, the banks doesn't trick you every time. As you see at this point, the price doesn't go below this horizontal line here, which it did like here. So if you went long here, when you see this, you can buy your buy stop order here, for instance, and you will not like when you see this down, but you have your stop losses here. And this is also 50 minutes. So all of these 50 minutes candlestick bars are not long time. It's just a couple of hours. So just stay put in your trade so you don't get nervous. You have your stop loss here, no worries. You just wait for the trade to go higher than this level here. And it goes down, test this level here, goes up, it goes down again, test the level again, and then it explodes. So you can understand that if you put your stop loss here and you put a buy stop level here, so this is your risk. So I can show you more visually how it looks like. Okay. The floor of this box here, it represents your stop loss. Your stop loss is at this level. And your entry level, buy stop level, is on this roof here. And you can see it's when the price gets above this pin bar, bullish pin bar here. So this is your risk range here. And now you can see how many times the risk ratio reward is. When using my strategy, waiting for the banks to manipulate you, but if you're waiting for it, you will not become a victim of this. The real opposite, you will make a lot of money with lowest risk. So this is your risk. And now you can see that this is 1 times, 1 to 1. Up here, it's 2 times your risk. I move the box higher. This is 3 times. So when the price here went up to this roof, you have already a risk reward ratio of 3, because this was your risk and now the price is here. This is 3 times. But as I told you, using my technique, anticipating for the banks to manipulate the prices, you will get the highest wins, highest risk reward ratio with the closest stop loss. Okay, so this is the third times your money. So this is on level, okay, it's on this, okay? So I move it up. This is 4 times your money. So here. So when the price hits this roof here, it's 4 times your money that you have been risked. And the price actually went a little bit above this box. So doing this technique, anticipating this false break, you got a little bit over 4 times your money in profit here, reaching this level. So let's show you another example. Pound dollar. Here it is. Here is a trade I have at this very moment. I will actually take my profits here because the price went up to this level. It's a double top. Very often the price will have a pullback on the downside. It's lots of profit taking at this level. So I will actually be some kind of greedy here and take my money because I don't have the probability, high probability to have a higher price at this very moment. So at this trade, I have at about $500 in profit, just a couple of hours. Each of this candlestick bar represents 50 minutes. This is 50-minute shot, pound dollar. So to recap what I told you about the euro dollar pair, the same here. You can see this wick here. This is a bullish pin bar. And we can see a pullback down here, and we see a sideways market here, nothing happening. So you used my technique once more. I show you how you do this. You put a level here. This is the lowest wicks here. So now you are smart. Now you are waiting for the banks to go for stop hunting here. Because when retail traders see this bullish pin bar here, hammer, they put their stop losses below this, like here at this level. And the banks know this. And you can see here what's happening. The banks pushes the price down here and take your stop losses here. Now you have a loss. And the banks takes your money. This is their liquidity pool below this line here, this horizontal line. So the banks fools you, take your money here, you're out because they take a lot of stop losses here. So your losses are the bank's gains. They take your money. So now they get a lot of money here, liquidity, and the price shoots up for the trade and they have this profit. So I strongly recommend you to trade like the banks. Don't trade like a retailer. When you are trading, try to think that you are a big shark. You want to sacrifice retail traders. Pretend that you're a big banks now, and use their cloth or